All right, ladies and gentlemen, today we're going to be talking about the strongest tool you can use in your trading, okay? And that's the Fibonacci tool. Now we're going to start off. Made a bunch of videos on it, but we're going to make another one because it's actually the one I use the most. These are my settings. If you guys want to copy them, please go ahead. So we have equilibrium right here, which is the halfway over the range. And we have OTE right here, which is the 0.618 to 0.786. I have a whole video on why these numbers are relevant, but basically these two areas here. Now, when you look at the Fibonacci, the zone below the 50% is called discount, okay? And the zone above it is called premium, all right? And the reason why that is because when your price is in a range, you can kind of assume that the halfway point is the fair price for it. Okay, anything below the items in discount, anything above, it's in premium. It's like saying this shirt is worth, let's say, $50, but at some point it might go to $55, $60, and at that point it'd be in premium, and then it could fall on discount, could be $30, right? And then that's when it's worth buying. So when you look at the Fibonacci and how it works, what you want to do is you only want to short if you're up here, and you only want to long if you're down here. And you don't want to put any longs in here, and you don't want to put any shorts in here. And what that's going to do is it's going to boost your win rate, it's going to boost your RR, and it's going to basically just boost the probability of the trade going your way. Now, I think before we start, it's also important to note that this whole idea is based off trends, okay? And trends move this way, right? It's an uptrend or a downtrend, okay? And what's also important to know is that even if price appears to be moving sideways, if you drop time frames enough, it'll start to look like this. I could find you an example. Let's say here, we could argue that right here price moves sideways, right? But if you drop to, let's say, 1 minute and I was to go in the same area, you can notice a very, very clear downtrend into an uptrend. Now this pair here is not very volatile, whatever, but clear downtrend and then an uptrend in London, right? So all you got to do really is just change your time frames and change your perspective. What's great about the Fibonacci is that it works on every single time frame, right? Based on the time frame alignment theory. So what that means is that whatever time frame you put it on, that's the time frame you use. It works on any time frame. Just don't go expecting whatever. I don't know how to spell that. I'm gonna be honest. I just don't go expecting let's say a 15 RR on a 4-hour Fibonacci, right? Um Anyways, so with that being said, we're gonna get right into why I think it's the strongest tool, right? Because again, trends move in a particular way. Let's say this is an uptrend, right? And the price is going to be moving this way. Now, when you're trading an uptrend, you want ideally to enter over here, not like up here, right? So, how do you do that? Well, entering at equilibrium is a really good way of getting those sniper entries that you've been looking for, okay? So let's say I was to take a look at this pair here, right? This is YM, right? Normal pair. Could just start looking at this. Okay, we've been in a downtrend since here. Let's see where price has ended up going down again, right? So we have our downtrend here. Take your Fibonacci, you place it down. Go from high to low. You always want to go from left to right. It's like when you're reading on a piece of paper. You go from left to right. Okay, so you put it at your high and then at your low. As you can see here, we get no retracement past equilibrium here. So we stay in discount. But again, we're looking for a short. So we're not shorting in discount. Okay. So when price stays in discount, makes a new low. All you got to do is drag it lower. And then once price breaks above, slap that short. Bing, bing, bing. TP hit. Right? You can even wait for OTE. But I'd say equilibrium is enough. Now, what I usually do is I put my stop at the high for high probability trades, right? And then if once price breaks your low, you can take profits, put stop BE, and then just kind of keep trailing, and you can start catching really big moves. Okay, but it's important to know that this works on any time frame, and I'll show you guys. Okay, so now we've hit this trade here. I'll put it back. Now we've hit this trade here. Now, how do we? Let's say we didn't enter here. How do we time this next leg? Well, very simple, right? We touched EQ here. We went back here. Now, if you go from a high to low, we came back, went lower. That's TP hit. But we don't trade that session. So now the new high is here. Go lower, right here, enter, bang, TP hit right there. And that is how trends work, okay? Now your new trend would be like this. Bang, slap the short here, ends up getting stopped out on this one. Unfortunate, right? But it happens. Again, it's part of a win rate. Now you think you're bullish over here? Perfect, right? Drop down, market opens on 930. This is right here, starts coming back, low to high, breaks back above, buy here, bang, TP hit, right? Even same thing here. Get a big move down, move up. Guess where we bounce, right? It couldn't be any more precise than this, right? Right here. So where I'm getting at is this thing is so freaking powerful, guys. You guys have no idea, and it works on any time frame. I could go into daily, right? Go for take your low to your high. Well, look where we bounce, and now I'm guessing we're gonna go back to the top, right? And I could show you an example where it actually worked. Take your last relevant low, right? Put it at the high. No pullback, break the high, bring it higher. No pullback, break the high, bring it higher. No pullback, break the high, bring it higher. Pull back to the halfway point, bang, TP hit. That's literally all you gotta do. As once your high is set, as the second that you don't get the pullback you need, let's say here, right? You put it at this high. Actually, here it came back and then it went to TP. So this would have worked. So now it would have been from here, right? But here you get skipped and it goes straight to TP. That's fine. That means this price has not yet rebalanced. So you bring it up some more, missed again. Bring it up some more, missed again. Bring it up some more, trade caught. Bang, big TP, right? I could go on a 5-minute, right? Here, look. I could even go on a 5-minute and take the exact same trade. 930 comes in, moves up, makes a low, pulls back to the halfway point, dumps the TP. We'll go to the next day, right? Price moves up, whatever, made equal lows. Well, here, technically, it would have worked out. You wouldn't have been stopped out, but I'm not a great example. We'll count this one as a loss, okay? We'll be generous. 1 loss, 1 win. Go back. At this point, we're still pretty bullish on the day, right? Slap it on. Where do we go? Bing. And then end up going straight to TP. Quite a bit later, but still ended up was in profit the whole time. I'll count this one as a win. All right. We'll move back lower. Bearish. From high to low. Halfway. Bang. TP. All right. We'll move it again. Price is just kind of chopping. If price is chopping, what did I tell you guys? Drop time frames. Go on the 1 minute. Okay. Now we're on the 1 minute. We have identified our zone. Where does market open? Market open right here. Ended up making a low. Went back higher, right? You're bullish. Low to high. Bottom. TP hit. Now price starts to break down to the bottom. Now you're bearish here. Okay. Now you've hit your longs here. Now your price is starting to break back down. Sweeps the big high. Breaks back down. Retrace. Where's my entry? Past the halfway point. Oh, you missed that entry. You weren't sure. You want to be more patient. Second leg down. Put it again. Halfway point. Bang. TP hit again. Oh, you missed the second entry. You want a third entry. Okay. Take that same high. Low. Enter right here. TP hit again. Starting to get some bullish displacement. Oh, once we break this high here, you start to think to yourself, oh, we're pretty bullish here. Okay, I'm not sure if we're going to get an entry here. You know what? I'll drop time frame some more. I'll go on the 15 seconds here. Let me just go to the right day. It might take a... Do I not have access because I'm on a 15-second and it's too far back? Fine. Maybe on a 30-second I'll have access. Hold on. There we go. Oop. There we go. All right. 30-second movement now. Let's see. Right? Low. Damn, actually, just on that day, it never ended up coming back, huh? Crazy. Well, I guess it did come back here and then it went to TP, but actually, yeah, I guess it does work because we would have breaking the high here, back TP. This one would have worked. Now at this point, we're here. Put it halfway TP, right here. Next high to next low. Damn it. It has to be significant high, significant low, guys. Okay, that means that we're not taking any. It has to be a high or a low that stands out. I can't explain it better than that. Okay. Basically what that means is this one stands out to me, this one stands out, this one stands out, this stands out, this stands out, this one stands out, this low stands out, stands out, stands out, stands out, stands out. It's none of these like random high here or here or these ones here. Like these ones don't stand out to me. Okay, this doesn't stand out to me. The circle stands out, this doesn't stand out, this doesn't stand out, right? These ones, they're like poking out, right? These are the ones that you want to be using. Okay. It's also important to understand that with time frame alignment comes your TP and stop loss placement. Okay, so if you enter on a 1 minute Fibonacci, okay, so let's say I entered on this pullback here to target this high. Okay, so if your Fibonacci is on this leg, your final TP is here. Okay, you're going long. You enter your long position at the halfway point, whatever TP here. That's all good and well. Okay, your TP, your stop loss should always be at your Fibonacci low. Okay, and your TP should be at your Fibonacci high, and then you can have an extra TP at the top. Okay, your Fibonacci is basically where your TP is and where your stop loss is, and then you enter on the halfway point. Okay, and you have a TP higher. But here I'm entering on a 1 minute Fibonacci. Don't start going on an hourly chart and start targeting hourly highs like here. Brother, you're on a 1 minute Fibonacci. Okay, you're not an hourly Fibonacci. You want to put your TP and your stop loss on the time frame on which you're applying your Fibonacci to. Okay, it's very, very, very important that you guys understand that. Okay, if I'm on a 15 minute, let's say, right, and I enter off this right here, and I start targeting these lows just like that. Okay, and my stop's at the high again, whatever. Right, we'll go to where TP is hit like this. Don't start targeting your daily lows based off a 15 minute Fibonacci. Okay, you're not gonna hit it. I mean, right here you did hit it, but that was lucky. Okay, like you don't have the control over that. You can leave runners to it if you want, but you don't count on that. Count on your highs and lows to be taken. Again, you're looking at a trend on a 15 minute. Let's say if your trend is doing this on the 15 minute, right? Maybe on a 4 hour, your trend is bearish, and this 15 minute uptrend is just this little retracement here. Damn it, little retracement here. Okay. So be very careful with that. Stick to the time frames you're comfortable with. Slap it on, and then you'll know exactly where to put your TP, your SL, and you'll have a good idea, or you have a good entry, and you'll be mitigating a lot of this false information that's being fed to you, basically, right? All these little fake highs being put in. This is probably just a bigger time frame rebalance to that halfway point to then go lower. So all these highs here that are getting swept, you don't care about that. You just care about entering at a smart price, right? At a price that makes sense to you as a consumer or as a trader. Okay. Now it's also important to know that this works on any single pair. Okay. You put at the low, back at the high, EQ, TP hit. This is on gold, by the way. All right. Wrong one. Low to high, back to EQ, TP hit. Low to high, back to EQ, TP hit. Low to high, back to EQ, SL hit. Low to high, back to EQ, maybe TP hit, who knows? Okay. Bearish as well. Low, high to low, equilibrium hit, or TP hit. All right. Low, I'm just going off random here. Low to high, equilibrium hit, TP hit. Low to high, equilibrium hit, drawdown, TP hit. Right? Drop down to the 3 minute time frame, right? Some random ass time frame, okay? Low to high, halfway point not hit, move it higher. Halfway point not hit, move it higher. Halfway point not hit, move it higher. Halfway point gets hit, you're in this trade, drawdown, TP. Okay? Very, very, very simple. You can even go as far back as a weekly chart. Okay? You can even look at a weekly chart and slap it on low to high, equilibrium, TP hit. And this is a multiple month trade, okay? Like, I'm just telling you guys, this thing is so freaking powerful. And if you guys are not using the Fibonacci retracement tool in your trading, you are seriously, seriously missing out, okay? OTE, which is this zone here, is basically just a little extra. Okay, it's you get a little better or a little better risk. You might miss some entries, but it's called the optimal trade entry for a reason. It's a really good thing to do as well, right? You also always want to wait for candle closure, right? So if you have a candle that doesn't close past EQ, now I don't have an example off the top of my head here, and this one doesn't quite get it there, so we're gonna be we have to kind of use something that did work out. We're gonna go back to YM because I know that there's a bunch that worked out right here. Um, so basically, I'm kind of lost. I'll be honest. Okay, well, hey, we'll do this one right here. So as you can see, this one here, right? Candle close past it. Don't just slap an entry here, okay? Even if this thing starts going up, don't FOMO. Wait for candle closures. Candle, candle, candle enters OTE zone. Candle closes back above first candle that closed back above EQ, enter on the retest of EQ. You get some drawdown. You can enter another position if you want. I don't care. And then TP. Okay. Wait for a candle to close back out of EQ and then enter on the retest. So let's say here, right? Candle touched EQ, close out, enter on the retest. Okay. If this was the first candle that touched it, you wait, right? Once you get a candle that breaks out of it and it cannot retest it like this, and now you can enter. Okay, and this is just gonna confirm because bodies tell the story, but wicks do the damage, right? So you want to always be sure that you wait for that candle closure before hitting the button. All right, I've been speaking very fast. I just threw a lot of information at you. I hope you guys can watch this video a few times and maybe write some stuff down. We're gonna go over a little bit what we saw today. We saw the Fibonacci, we saw the settings, we saw why it works, we saw why it aligns with market structure, we saw how to align it with our different time frames, how to place our TP and SL depending on the time frames we're at. Smart money concepts integration, right? You want to wait for your breaker structure, maybe you get a breaker structure here for a value gap down over here, right? Whatever you want to integrate your ICT stuff, start slapping it down, wait for price to come down to here and enter a long, right? Use other confluences if you're going to be using it with them. We talked about OTE, EQ, and how I kind of use the Fibonacci, how it works basically every single time almost. And if it doesn't work, the truth is that it's most likely a trend change, right? Like let's say here, you expect a pullback right here, but he should never have entered this because why? Candle close below, then close below, candle close below, never a candle that close back higher. He never entered this. Trend change, no problem. Trend change, what do? Go from your high to your low right here, and instead cash the shorts up here. Bang. Okay, so again, be very careful on how your candle closes. And other than that, guys, I hope you guys have a great rest of your day. If you guys like the video, please like, comment, subscribe. If you have any questions, drop them down in the comments below. I love every single one of you. I have a free Discord, links in the bio. If you guys want to watch me execute live and make money live with me, again, it's free. You guys are very welcome to join in. I love every single one of you, and I'll catch you guys later. Peace.